And everybody, welcome to another edition of Your Money Radio. Danny Stewart, Don Vandenbord, live with you whenever you are listening to us. Listen, stock nerds and market lovers across the globe, I just want to say thank you. This is the most popular thing we do globally. It is downloaded at a rate that exceeds all expectations. So I want to say thank you for that. And two, I want to get the Don shirt. I can see the upper letters of what looks like KISS. The
Shocking.
monetization, yep, the monetization of KISS continues. What do you got there? What are you wearing?
It's the 76-77 tour shirt back when I was 12 years old, when they were in the peak of their career.
Are all four members of KISS still in KISS?
No.
Who's been
Peter
been
Criss, the drummer, and Ace Frehley have been out for quite a while.
Really?
Yeah. Well, they were out for years, came back for a reunion tour, and then just didn't think they were getting enough money and bolted. So Gene Simmons and Paul Stanley have been in it since the beginning, and two replacements now.
Equally? Like this is
because,
why is it not just
because when the two guys left way back when, they're not in the band anymore. Why would they continue to draw an equal share? So when they brought them back, they hired them as basically for the tours as employees, not as equal partners. And
is that a dick move?
I don't think so. I mean, if you leave and somebody else carries something on for 25 years, do you think you decide to come back, you should automatically be an equal, get an equal share?
I see that point. I'm just wondering, like, were they a draw that makes the upcoming tour that much more successful?
I imagine they were, but their choice is zero or a very nice salary to come back in. So they had a decision to make.
Speaking of
Gene Simmons is quite the businessman.
Gene is
very good.
He keeps a close eye on his nickels. Yeah.
He has branded everything.
Everything.
KISS credit cards, KISS Cola. There
Caskets.
is die with KISS.
Yep. KISS cruises.
The KISS cruise has to be interesting because I imagine the members of KISS are not tan at all. Like they're probably the whitest thing walking around that boat.
That's probably likely. I haven't been there, but maybe I will someday.
So look, stockers, market lovers, got one more thing I want to talk about with Don here because I got the best text from Don this week, but I got to point out to you, don't chase. Like there's never, if you watch the video from Thursday night where it said if this happens, I'm selling stocks on Friday, and I'll cover if that thing has happened or not. Here is 8 a.m. and so 8 Central, 8:30 when the cash session opens. And think about what's happening. It's FOMO for Amazon, FOMO for Apple, FOMO for the Facebook. And I got to tell you, you just don't need any of it. They sold it right at the open. And you can see it's kind of struggling. These are the NASDAQ futures right here. And you can see you went up from over 1% in the futures to now you're down 0.3%. And even in this market, there's just never a reason to chase. You can
I disagree with that. If you're talking about a monster volume gap up, volume gap up. Speaking of which, I bought one today.
Well, I guess we should say if you have rules, define rules. But if people who are chasing Apple or chasing Amazon, what'd you buy, Don, before? Because I clearly don't know. So what'd you buy before I? Oh, Pinterest. Let's talk about Pinterest here in a minute. But before we talk about Pinterest, before we talk about gap rules, which we should do, and then why I don't think you should chase, I got the best text from Don this week. Danny was on it, and it just said Boeing's a shit show. And that's the best text I probably received all week, Don.
You know, I strive to be accurate here.
It was so short. And there was no context. There was nothing that led it. We weren't talking about Boeing. He just sends a text out that says Boeing's a shit show, and that's it. And like that was the message. So
Boeing is one of those stocks. I mean, obviously it's a big company. It was a leader for a very long time. They've got very well documented problems. I keep an upside and a downside alert on Boeing so that I know what's going on with them. I want to keep my finger on it. And I've dropped the downside alert about 8 times this week because it keeps breaking and going lower.
They reported earnings, right? I was going to screenshot the text and then tweet it out, and I thought, that's Don's artwork. I don't have the creative license, but it's just the best.
I didn't trademark it. You were free to do it. That's
and we own Boeing. Someone long time years ago, like, hey, did you guys just buy Boeing? Or a little angry much? No, we sold. Where did we buy it, Don? I actually got to go back. Once it broke our rules, we just got out
that
of it.
that little pop up there, right in the middle of your screen.
Yep.
And it failed pretty quickly. We sold it within 3-4 days, but
yeah, like we sold it like right in here somewhere, and so that's like why it was in the 170s. So it was like 173 to 175, somewhere in there. And then we had bought it in the mid 180s, low 180s, something like that. And I didn't really intend to do this, Don, but I'll do it now. Typically, your first opportunity to sell is your best opportunity to sell. And so we sold, and I just wonder how many people and we don't know, like we'll never know. Like we have what we do for clients, but stock nerds and market lovers that aren't clients of the firm, we don't know if unless you write to us, we don't know if you took the trade up here, but then you see this down here and you're like, well, I'm going to hold on for earnings. We've got to recover. You just start making excuses to why you justify your actions. And you're like, well, I'm going to hold on. This should be a catalyst. Maybe we'll get a run into earnings. And it didn't even run into earnings. Like it did nothing.
And it also didn't hold the bottom of its earnings day, which is one of my key rules.
Yep, great point there. And so typically your first opportunity is oftentimes your best. And an easy way to do it, did you get 2 closes below the 21? And if that's violating your rules, great. Did it violate maybe a percentage rule? In conjunction with this rule? And so if all those answers add up to yes, there's just absolutely positively no reason to be holding on to it, no matter what.
Where you have that number 2 drawn on there, look at the 4 wicks immediately to the right of that. That's every time it tries to do something, sellers show up. That's distribution. That's people saying, I've had enough of Boeing. And not people, it's people with deep pockets, mutual funds, pension funds, hedge funds. Anytime it tried to make a move, it got sold into. So plain and simple, it's not ready. There's a point when it'll be ready. It may move very fast. If you scroll that chart out a little bit, you can see that big move that it made off the bottom when there was some good feelings about maybe people are going to start flying again. Maybe the 730. You see that big move there with when the turn exactly. It moved. That was a big move. And somebody bought the top of that move and is not happy.
Yeah, extremely not happy as it continues to sink into the Boeing abyss. And so that's interesting, though. I'm curious. Danny, can we just talk for a second about how great I am? Do you mind?
Sure.
This could be a while. So go ahead.
It might be a few minutes.
Can I go take a nap and I'll come back?
I didn't know you were awake now. So I had not planned. I'd wanted to mention the text to Don because I thought it was the funniest text I'd received in a while. Because I'm telling you, stock nerds, there's no setup. We weren't talking about Boeing. It's just Don. I don't know if he just like F you, Boeing.
He was screening through charts and it just came across his thing.
And it's the best thing I had received all week.
What does that mean?
And so when I had not planned to do this whole thing on Boeing, but because I'm such a broadcast professional at what I do here, Danny, look at this. It's 5 minutes of content highlighting our rules. I'm telling you, man, I probably will screw up the rest of the show. I probably just jinxed myself and screwed with karma there, but gosh, I'm great.
And look where it's coming back to though, the -3 ATR.
Yeah, that's what I wanted to get to.
May get a bounce there, but there's so many. It's not a leader, so.
I got to tell you what, and I've done some pretty aggressive study after study on this, Don, where that's a low risk entry, but man, you got to be quick on the sell, because what happens, and Don's noted this as well, those ATR levels start curling down, and you can see it curling, like a little bit right here. They just start extending. And so even though it's being contained in that third ATR band, it's really, if you're going to buy off the third ATR looking for that bounce, you got to be quick on the draw to cut it loose if it wants to start closing below that third ATR band. I've been asked about that. Conversely, Don, give me let's do.
Wait, hang on real quick, Tim.
Yeah.
So I just want to put my Tim interpreter on. What Tim is saying is the slope of the line of the ATR is important. Just like moving averages, you want them to curl up or, to be bullish. If they're curling down, it's bearish. Same thing with the ATR lines.
Yep. That's exactly what I'm trying. Thank you for that. But it's conversely, a really good friend of the show, Mark, asked, hey, here's GDX, and you can see GDX having itself a day up here. But he said, is it a good strategy when you get up to that third ATR level to sell covered calls? Like if you own 100 shares of XYZ stock and it's hit the third ATR, is that probabilistic? And I said, look, I don't study that. Like, I don't know if that's true, but I don't. It's kind of like one of those things that if it's a runner, you're kind of capping yourself off. I'd rather see it flag out. I don't know about covered calls. I don't sell covered calls, but I don't know at the third ATR if that's just inconsistent of a strategy as buying at that third ATR band. Does that make sense, Danny, the way I phrased it?
Yeah, and look, that just doesn't fit our strategy. If you're kind of and I cringe when I say this, a buy and hold type where you're going to hold that for the longer term anyway, and you're trying to create, then that, if you're going to do a covered call strategy, you'd want to roll a covered call after a pop, after a big bounce, the third ATR. That's the time to do it if you're going to do it.
Yeah, I wouldn't know the duration that you do the covered call on. Of course, you're going to get more premium for the closer in call. I just don't know, because I'm telling you, like this GDX, to have your shares called away at 38 when you're up here, that's good money. Now listen, in all transparency, we have a GDX position that's been doing really well. So we sold half of that this morning, just to lock in some gains. Yeah, and the reason why is if you look at GC, gold could do a lot of things here, and I don't want to pretend that I know I don't know why that changed. What gold's going to do, but you can see gold up here really close to 2,000, and those wicks that Don just talked about. One shows up here. Here's a buying wick, but today hits 2,000, and that feels like a natural pausing point. I hate to use the word feel, but if gold's going to retreat back 50 some points, and plus if the market's soft, you're going to feel that in the GDX a little bit more aggressively. And so if you've got a position that you're working, always okay to just sell half. And if it wants to run, great, let it run. I mean, some people are talking gold 5,000, right? I'm talking gold at resistance at 2,000. Maybe let it come back to the third ATR, flag out, and then I can think about adding back a little bit lower. Does that make sense the way I said it, Daniel?
Yeah. Look, the 2,000, that's a big, even number. It's the Jesse Livermore rule. 100, 200, 1,000, 2,000. Now, if it breaks above that and then holds for a few days, and that could become support. But right now,
and that's it. Somebody asked me if I would start looking at weekly ATR charts on Twitter. And this is the other thing too. So here you are at the third weekly ATR, but look at how you got there. I mean, I know we talk about daily charts here on the show, but third ATR weekly back in February into March, pull back. Third ATR back to start the year, pull back. Above the weekly third ATR last summer, almost a year ago, and pull back. And so this seems to me like a place that gold might want to pause. And so, and I get it. I get what the economy's doing. I get, which we should probably talk about. I want to get the Don's Capitals though, but I mean, that GDP number was really bad. You know, like it just awful. And I'm setting you up here, Don. So just Don say, oh, blink. Okay, I thought Don was frozen, and so I'm like, blink, Don. Tell me if you're there. You know, the only way to get Don to react, so I know he's still alive, is to say In Excess was a greater band than Kiss.
Oh, for Christ's sakes! Now, come on.
Another way to get him to talk is put up a really, really ugly chart of the stock and say how bullish that looks.
That'll work too.
Yeah, but like the GDP number is really bad.
In excess. Jesus.
Looking for a new sensation, Don.
Man.
Is that who's new sensation? That's In Excess, right?
I don't know.
What about George Michael?
No, George Michael.
Careless Whisper.
I'll tell you what, the greatest Christmas song ever written is Last Christmas.
He did have a good. I'll give you that.
Yeah, man.
He had a
Love
great
me
voice.
some Last Christmas. Oh, I like the George Michael. Yeah, he should have known better than to cheat a friend.
Waste the chance that he'd been given.
Thank you. Yep, absolutely.
Yes, it was New Sensation by In Excess.
Oh, God, I feel like I just lost the ability to do math there with pulling that from my butt.
Lead singer, I believe, committed suicide.
That is true. That is an unfortunate shame. Australian, right? Australian fellow.
Yes, yes.
By the way, kind of along those topics, it just popped in my head. I watched A Star Is Born with Lady Gaga.
Was that good?
For the first time, it's a great movie.
It was a good movie.
Tanya watched that. She when Nora wasn't sleeping through the night, she went through a whole series of movies. And she said, do you want to watch this with me? I caught like 5 minutes of it. So how I watch movies, Danny, is I'll see what's on in the background, and then I'll just ask Tanya incessant questions till I figure out if I'm interested enough or not. And it turned out I was not interested at all.
It's pretty good.
Now,
you would probably like it. You would probably like it.
Because so Reagan likes to watch movies. I don't have the patience to sit down and watch movies. Okay, I don't watch many movies. If you said what's the last movie you watched up until this week, I couldn't tell you. But Reagan and Tanya thought it'd be a good idea to go through all the. We should talk about the GDP number in the markets here in a second, but this is more important. So she wanted to talk about or watch all the movies that Marvel put out in. There's two ways you can watch them: the way they were released, or the timeline to which. Yeah, like Captain America would be the first because it was 1940s, and then you start working your way through that way, and that's the way we've been doing it. I tell you what, who knew those movies were so good? Have you seen those movies? Anyone?
No.
No, you haven't seen them? Oh my gosh. Let me be the first to tell you that Guardians of the Galaxy was awesome, both 1 and 2.
I'm sorry, I can't watch a raccoon in space.
Oh my gosh, they call him Trash Panda. It is so awesome. So the raccoon doesn't know that scourging, foraging through dumpsters and trash cans isn't a good idea. And so the lead character, I think it's Chris Pratt, looks at him and calls him Trash Panda, and the raccoon goes, is that a good thing? He goes, it's totally a good thing. Trash Panda. Come on, man, that's great. Anyway, GDP. So really bad, right? And yet you want to know if there's ever a period in time as markets get worse here, to not mix markets with economics. It's been this period, because you've missed out on a tremendous move. Now, whether that move is coming to an end today, I don't know. Maybe this is all it's got, and after the big stocks have reported, 40% of the NASDAQ reported last night, maybe it's over. But it's been a tremendous move. And Don mentioned a study on our call this morning that I think is really apropos to talk about. And so The GDP number's bad. The economy is it getting worse with all the COVID spikes? And I show every night, and Don notes it too, the put call ratio chart. This, even though it's up today, this is the zone of complacency, and that same area with the same metrics pointing down moving average gives you that big drop back in the beginning of June. And it's the same, look at it, it's the same look that gave you that big drop down in February. And so maybe it is, maybe this whole thing's all coming to an end. No more $600 per week. Things are changing. COVID's bad, and we're going to hell in a handbasket. And then Don says something about the AAII study. I'm going to let Don take it from there, because what Don is talking about, I think, is maybe not stock nerds and market lovers, but it's their friends and family. It's what they're saying. And I think it's what can fuel this market to either just trade range bound sideways or eventually get that next leg higher. Don, can you talk about that study?
Yeah, the AAII surveys its members and breaks them into a bear, bull, or neutral camp, and they're only 20% bulls right now, which is an amazingly low number considering that the markets are near all-time highs. You would expect just the opposite, and that the markets are too frothy and people are too bullish, and it's a contrary indicator. And if you're using it as a contrary indicator, you'd think that the markets are going to continue to go up. However, if you look at the, as you mentioned, the put call ratio as a contrary indicator, you would think that the markets are going to go down because it should spike. So you are getting, there are mixed signals. And once again, we get back to the best thing to do is watch the charts.
Yeah, and that's where I was headed to with all the economic information that is out there. There's very few pieces of economic information that move markets. A jobs report will move the market, certainly on that day, but the GDP number didn't move the market. And a lot of people are probably confused about that. And the answer to how to approach the market, so it's not, because that GDP number for somebody is earth shattering when, if you buy it, Don, give me an extended stock that's pulled back dramatically. Let me just do Nikola. It's easy. NKLA. This isn't something, but here's Nikola. Jesus, Nikola's down. The last time we looked at this, what's 5 days ago? 1, 2, 3, 4, 5. It was $32, $33. Now it's 29. It's a big move. Anyway, so when you buy something extended, no matter what the news is the next day, economic or political, and it starts to correct, oftentimes what happens, and it's not the case with Nikola, just go with me at the analogy, stock nerds. What happens is you or the news media shapes price action to the stories of the day. And so you start blaming economic indicators, economic pieces of news for the price action that affected you personally. Danny, does that make sense? Because I want to pause right there, the way I said it.
Yeah, it makes sense to me.
Okay. And so yesterday, that GDP number affected somebody who saw a stock dramatically pull back and thinks it's because of GDP. But what Don and I have been advocating forever and a day is to buy, like if you look at, DXCM, if you look at Dexcom. So all you have here is a stock. Here is the mean that's consolidating between the 1 and 2 ATRs. That's not extended. It's not, probabilistically looking to pull back from the third ATR, but how you buy stocks and ETFs, how you buy shapes your worldview. And so when Don says just look at the charts, yeah, look at the charts, but how do you look at the charts? And therein lies some of the music between the notes that we do. And so confusing economics with the stock market is really difficult here. And maybe it pulls back, maybe they sink back up as we head into the election. Some of you out there are going to say we're going to crash into the election because COVID's getting worse, or you're going to say the Fed's going to save the markets and we're not getting that bad. It's not that bad. I still haven't gotten to Don. You bought Pinterest, right?
Yes, PINS.
Table that for a second. So here's a timing mechanism that I think works in conjunction with like a couple pieces of information. So Don says, watch the charts. couldn't agree more. And so if we are looking at, say, the S&P futures, and they continuously hold, wow, down 1% now, continuously hold the 21, well, that's bullish. But if they start to fail at the 21 and look like they want to head down to the 50, in conjunction with a inverted volatility futures index. Like when I'm looking here, the 28s are still pricing below the September's, still pricing below the October's. That's normal. But if that were to change, I would then want to be a seller, because that's telling me now that the people that are most concerned about the market, and Don mentioned them earlier, pension funds, mutual funds, hedge funds, they're getting ready to sell. They're so concerned. And by the way, it's not that they're selling. They have so much that they have to hedge. And they're telling you, I'm buying so much of the current market protection that even though there's only maybe 20 days left on it, it's worth more to me now than something with further duration. And that's a really big deal. And we haven't gotten that yet. And we haven't gotten that all summer. And so that's why I don't think you can be short this market right now. You can trim, you can keep the velocity of money going forward, but you got to be able to use pieces of information together in an amalgamation, not in a vacuum, to make investing decisions. Saying GDP bad, I'm selling stocks. GDP bad, I'm shorting, is a recipe eventually for disaster. Danny, that make all kind of sense?
Well, yeah. So yeah, no, I actually wanted, that makes perfect sense, but I wanted to jump onto that. So the question is, how do you overcome your fear of buying when you feel like the news is bad or it doesn't jive with your belief system? And
Right.
so you were talking about earlier, Jim, you made a comment, well, you may be here for a little short-term pullback, you don't really know, but all the big mega titans have reported, and you said, 40% of the NASDAQ is reported just yesterday, the last couple of days. Well, actually, if you look at market cap, it's probably closer to 80%. But and Don jumped in and said, well, I actually did buy something today, Pinterest. That's because Don knows exactly where he would sell if it doesn't work out. If you don't know where your sell point is when you buy, then you're swimming with the sharks. You've got to have a plan, both buying and selling, and that'll really alleviate the trepidation, and it'll help you overcome your emotions. Let's put it that way.
Yep. And so as you look at like Amazon's had itself a journey today, 31.63. This was trading pre-market, I believe, 32.50. It's pulled back almost $100. Apple's just holding its own. Apple's super duper strong. Look at Tesla. Opened up above 1,500, like 1,520. It's pulled back $90, $100. Like this market is going to do everything to shake you out, and having buy rules and sell rules is so critical right now. And so let's do this, Don. Let's talk about Pinterest, since Danny just mentioned it again. So wow, look at those Pinterest earnings. Let's do this. And that's holding up, by the way, first time I'm looking at this, holding up in the upper third of the range. Is this a high short interest stock too, Don?
Let's see.
Curious.
400. 2.2 days on 400 million, so 24.30, about 10%.
It's not that. That's not that bad. Anyway, what are the gap? Great time to cover the gap rules.
This is just like looking at a familiar face in a photo book. So many big leading stocks have kicked off a big run with a monster volume gap higher. I don't know where Pinterest is going. I just know I'm putting the odds in my favor by buying that setup. And not huge earnings, but something changed with this today, and the volume is 1,100% above average. So it wasn't necessarily the gap in the percentage. I understand it's up. Don, you're buying a stock up 30%. What the hell's wrong with you? It happens time after time after time after time. And as long as you hold the bottom of that gap, the first time you come into the 5 in the ADMA, you should hold it. It's just a couple of if-then statements that are going to dictate whether I'm going to continue to hold this or sell it.
This is what panic buying
it's really
looks like.
That's what it is. It's very similar to the big Facebook gap. Facebook was a terrible stock after its IPO. Then one day they came out with a earnings report, and it looked like they had a big acceleration in their mobile earnings, mobile sales, and it changed everything. Pinterest, people sitting at home, will it continue? I don't know. The market is acting like it's offsides on this. It is acting like it's under-owned by pension funds, mutual funds, and hedge funds. Only 587 funds own Pinterest. Let's compare that to Facebook. It's owned by 4,638 funds. Think there's a little bit of room to grow for Pinterest?
That is a fantastic stat. So there, hey, Danny, if I don't get back to the words panic buying, just say it so I can trigger that thought again. Here's what Don's referencing. So I go back to 2013. This is the, so here, let me just get my marker off, come over to these earnings. This is the earnings. You know, it's interesting, Don, about this earnings series. So Pinterest is the end of the month earnings period. Look at when Facebook decided to start to make its move out of the low 20s. It's the same time frame, just 2013. Isn't that fascinating? Like, that is absolutely positively fascinating. So whether Pinterest goes on to be another Facebook, Don will be watching it. But this is we're on a weekly chart, by the way. And so this looks, of course, much, much more dramatic. And then this is panic buying on a weekly time frame, breaks out. And so what's fueling that breakout, it's not traders like you and me. It's, you know, individual investors. It's the mutual funds, the pension funds, the hedge funds. And so if you go back to Pinterest, that's what I mean by panic buying. Most people, I typed the word panic in, I did not mean to do that. This is the same way, it's a weekly chart of Pinterest. This is panic buying. That there's not enough exposure to this in their portfolios. And so they're going to sell something to get into this. So it's on the books for the last day. People know that they have it and they need exposure to this. And these moves, I'm really curious, Don. I take this to an ATR chart. So this is a weekly on the ATR chart, but ATR charts don't work that great when you have these kind of breakout moves. They continue to move higher and then they flag. And so, man, that's a great spot by you. Great spot and a great use of the fund details to explain it. Boy, that alone, we should just end the show right now because that alone is worth gold. Yeah, I'll be serious, because that alone right there, putting that together is worth gold to stock nerds and market lovers. Because if you can find,
isn't that crazy?
Yeah, if you find Don's, you know, like gap ups like that, and then you understand that they add that mutual fund piece into it, that's a tremendous piece of information that is incredibly valuable. There's not enough. Don, give me a stock that you bought on the gap up that had the same, not enough exposure by the institutional investor crowd.
FSLY.
There you go. And by the way, that recall from Don, this is why Don is absolutely crushing it this year. I'm telling you, Don is one of the best in the country doing this right now. And that recall is exactly what Don's referencing when he says it's like seeing the picture again. FSLY. There you go. So let's talk about it. Go ahead, Don.
It's the same exact situation. It gapped out, Fastly massive gap out on big volume after an earnings report on 5/7. It ended up 46% on the day, volume 620% above average, closed the day at 34, and it's tripled since the gap.
Yeah. You just triggered a thought. I gotta write this down. We'll talk about it here in a few moments.
And I got shaken out of my most recent buy of it last Friday, unfortunately.
But it's a great example of something, that you have participated in. And I'm not as much of a buyer of gap ups, but I am. It doesn't mean you can't get the same result. And this really didn't have a gap. This is just Meritage, buying it from. Where did I buy Meritage from? I want to talk about housing here in 1 second. 7.7, somewhere in here, right from this flat base. But you can get the same result. But I'm telling you, when you find Meritage had growth, Meritage didn't have a lot of mutual fund exposure, Don. So if you look at the can you tell me the mutual funds, Don, in Meritage real quick?
Yeah.
It's increased. I know that.
550.
And then tell me the mutual funds in DHI.
1,705.
550 to 1700. By the way, Danny, I'm going to take back what I said earlier. I have not jinxed the show one bit. I am so incredibly brilliant with the way I'm conducting this show today. I want to give kudos to me, okay?
You got great support, man. You got great support.
I absolutely do have great support. So Don, I didn't know, man, that's so Meritage is like a 30% winner, okay, right now for me in the portfolio. DHI is only 17%. Notice which one has less institutional support, 550. So they're buying it. They don't have enough exposure to Meritage, but at 1,700 funds, people got enough DHI. Does that make sense the way I presented that?
Yeah, and also you have to look at the market cap, the average daily volume, and the price of the stock, because some bigger funds may not easily be able to get into Meritage because it's just not as big. Its market cap is 3.7 billion, whereas DR Horton is 24 billion.
Yeah.
So there's a lot that goes into, you know, the decision of how much higher can something go.
Yeah. And so the institutional support is critical. And the way Don just started the whole discussion on it absolutely fuels the growth. And so when I don't know, like when I know that information, but I still don't know which one's going to lead, I take 2.5% positions in the two leaders, and then I go. But oftentimes what happens is you'll end up, a lot of individual investors will buy the biggest name. They'll buy the name they know, which is oftentimes what Don was saying, the largest market cap, instead of not knowing. And this is just ignorance. It's not in a bad way. It's just you don't know what you don't know. Not looking, saying, okay, well, what's the market cap vice the institutional support? And by the way, you get too small, then they don't run like they think they would, because it excludes a lot of the institutional support. There's a sweet spot in there, and quite frankly, I think it varies by industry.
It does, and
Yeah,
a 30 million outstanding shares is a lot of mid cap leaders start their runs from that. It's just illiquid enough to make people overbuy it, but just liquid enough to get the right people into it, start paying attention to it.
Sure. So what's the market cap of Facebook versus the market cap of Pinterest?
Facebook's market cap is 717 billion. Pinterest is 19 billion.
There you go. And so the easiest way to get a stock to double is do you buy Microsoft? Do you buy Facebook? That, by the way, that's why Apple's run has been so impressive. There are so many shares outstanding of Apple. That's why when the money that's been coming in to these big mega cap stocks, that's why the move is just that much more impressive, because it takes what's that GIF or meme of the two sailors shoveling money into a fire pit? You guys ever see that? Like they're just shoveling money in there, and they're moving those stocks, and it's incredible what's happening today with Apple, even in spite of the pullback in the markets, is absolutely impressive. So that's what's fueled the move in Shopify, by the way. What Don and I had just been discussing. Dan, you had something to add, and I'm sorry you got cut off there.
Oh, well, no, Don was talking about the 30 million shares, average volume. Also, and it does vary a little bit by industry, but that market cap, the small, forget about micro cap for a minute. The small cap is generally under 100 billion, just rounding. Once you get into that 2 billion, to $5 billion range. That's kind of the mid cap, maybe all the way up to 7, 8 billion. But once you get past that 2.5, 3 billion, you start attracting bigger funds that can lower the bar because they've got certain minimums on market cap. So that Meritage or other companies like that might be in that perfect spot to be able to move much higher because now they're coming on the radar of funds that can hold them.
And then while we're speaking of just a couple housing stocks here, we talked about this on our call this morning. Like when I show you the TNX, this is how you read this chart. This is the yield of the 10-year Treasury. The 10-year Treasury, just move the decimal point out here, is 554 right now. So I want you to look. And this is eventually all this is going to matter. In March, what did the yield get down to? 398 on the worst, one of the worst days, and then it just bounced up. But you're at March levels right now. Like you're at 554. The very next day, you went up 5.8. So you're back into March levels on the TNX. And Danny, what happens if that interest rate continues to drop? This is a good discussion. Like what are the ramifications for?
Well, think about it. First of all, 0.55, that's a little over 0.5% for 10 years of risk. You're going to invest your money for 10 years and you're going to get 0.5%. And you know, the government says there is no inflation. I don't know where they shop because my prices are going up 2-3%. But so here's and that's another thing that is helping the stock market. You know, remember in 2008, Bernanke said we're going to drive interest rates so low, we're going to force risky investors into riskier assets. Bond yields are so low now that really the only way you can make money on bonds is capital gains. It's not the interest, it's not the coupon. So you're kind of forcing people into stocks. They've got to do it now. You asked me if interest rates go lower, okay?
Right.
If interest rates go lower, I mean, we're almost getting to negative interest rates like Euro, but if interest rates go lower, you'll get a little bit of a capital gain. But there's a thing, it's not just duration. So duration means how much inversely the price of the bond portfolio moves with interest rates. So if interest rates goes up 1%, how much does that buy? It's similar to maturity, but it's a little more sophisticated. Well, there's another thing called convexity that gets real heavy. What that means is most of the big gains in drops of interest rate drops have already taken place. So in other words, a 0.5% or 1% drop when rates were at 3% or 2%, you get a much bigger gain than once you're down at 1% and it drops 0.5%. You're not going to get that same amount of gain. So most of the gains have already been made. So the point is the upside potential of more gains if rates continue to drop is not as good as what happens if rates rise 1% or 0.5%. When rates start to rise, the big losses will occur early on in the bonds. So all I'm saying is the risk reward right now for bonds, I mean, unless you're trading, now we use them and we will trade them, but they've got to be short term. You can't just buy bonds and hold them right now. That's a
great point. Let me do this real quick. Can you hold that thought about bonds and holding them? Because I know a lot of stock nerds who have these things because they write to us. Stock nerds and market lovers. What I want you to do, if you have questions about this, go to revereasset.com. Oh, real quick. After you're watching this video, if you have not seen Don's 21/21 watch list, that'll be posted Friday night. Go to Daily Market Insight. That'll be right there, and you'll see Don's video appear. Just click the tab. You'll see it appear there somewhere. It'll probably be above this video podcast that you're watching. And then, look, Danny is America's fiduciary, does a service for you, and so a number of stock nerds have, excuse me as I clear my voice, a number of stock nerds have been sold onesies and twosie bonds, meaning you've got a single bond in your portfolio it's not a government bond, it's a company bond, for some corporate bond. what Danny's saying is this is not the time to own bonds or hold them for the duration, or someone's telling you to hold them for the duration. What Danny's telling you is that's the worst advice. It's almost akin to the criminality that takes place in the insurance world where they try to sell it as an investment. Did I say that good?
You did.
So look, if you've got yourself, and here's the problem. Don and I were just talking about volume, and we were talking about funds coming in. The reason why your onesies and twosie bonds, I'm about to tell you, they're not, whatever you're being quoted as the price you can get out at, it's not the price you can get out at. You don't have an accurate bid, bid ask on your bond. So when you're looking at your statement or you're going online and you're seeing, oh, this is the value of my portfolio, that bond portion isn't accurate. It's because when you have low volume, meaning no traded, and you call up a trading desk or the computer calls up the trading desk because you put a sell in there, the bid ask is going to change dramatically. And so your bond isn't worth what you think it's worth. And Danny's telling you right now, this is a dangerous time to own bonds. And so unless you're looking for price appreciation, but a lot of you are not, you're looking for the yield. And the higher the yield in the bond, the worse the credibility of the bond is. And that's a whole nother story. And so what I want you to do is if you've got a loved one who's been sold if someone from Raymond James, Edward Jones, Merrill Lynch, Morgan Stanley has put bonds in your portfolio, that was probably a good move for the bank or the issuing person, but maybe not for you. And I use the word maybe there, okay? So what I want you to do is this. Call Danny. It's the number's right here, 855-732-5932. Whether you're a client of the firm or not, Danny will help you because he can get we have a trade desk. He can get quotes for you. He can give you an accurate representation of what that bond's really worth. And if you don't quite understand why it's dangerous in bonds right now and what the falling 10-year treasury means to you right now, what I want you to do is call Danny as America's fiduciary. He's going to help you. We have no one to stalk you. You're not put on some list. You're not going to be solicited. We just want to help. We're here to empower you. And a lot of you, unfortunately, have been told things about bonds that just aren't true. Just like you've been told life insurance is an investment. It's not true. And so it's an insurance product. Am I right, Daniel?
Absolutely. It's a product.
It's a product.
Insurance is only to insure a risk.
Yes.
And it's actually not supposed to be sold as an investment. That should be very secondary. And even then it's not really correct.
And there's a better way to insure your risks or hedge. There's a better way to hedge your life than buying life insurance as an investment. And Danny can help you with all that. And look, they make it difficult to understand on purpose because the person that sold it to you is trying to make a commission. They've also got tentacles. These policies and these products have tentacles, meaning the longer you stay in them, the more the person that sold it to you gets paid. And that factors into why you got something. You have to understand all this. And so call Danny, 855-732-5932. We'll help anybody in any way that we possibly can. If you have any questions with anything I'm saying here, there's my email address. Here's America's Fiduciary right here. And if you like the strategies to which we espouse, all you have to do to come on board is a couple DocuSign forms away. It's a hell of a lot cheaper than the opportunity cost that maybe you've missed. You've cost yourself some opportunity. And it's a lot cheaper than a lot of people. That's a common refrain. This is not expensive at all, and it's not. And so hopefully you'll investigate coming on board. But if not, we're here to help in any way possible. Now listen, if you want a text message with us, I used to give out my phone number. I don't do that anymore. At TJ Reazor, you follow me on Twitter. That's a notification. And if you let me know that you followed me, I'll follow you back, and then you can message with me, and you'll get great tweets like this. There it is. Look at those FANG earnings, Don. That's what Nora's saying. She's all intent. She's like, what? But
gotta start them young. Before.
Yep, you do. And so at TJ Reazor is my handle. Danny's Danny's handle if you want to communicate with Danny directly. One Danny Stewart. And someone will say, well, what's the difference between email And here's Don's. D. Vandenbord, what's the difference between email and Twitter? I'm going to tell you that Twitter for us is brevity. And what do I mean by that? I mean that when you communicate with us on Twitter, you tend to keep it short. When you email us, some of you write volumes, okay? And so those questions take a while to answer because we're thoughtful in our replies. Sometimes I just do it in the videos at night because it's a hell of a lot easier. Twitter is faster. You'll get answers from me personally a hell of a lot faster on Twitter than you will on email. I'm just going to tell you right now because my inbox fills up. Sometimes they drop. I don't mean to miss anybody, but sometimes it happens. The easiest thing you can do to get even more immediacy than Twitter is this. Go back here and just call. And I know some of you were afraid of the telephone, and it's because people have trained you that when you call some firm, you're going to get stalked. Our promise to you is that we're not going to stalk you. We're not the traditional advisor brotherhood. We don't have a sales staff. Everything that we have earned in life as a firm has come because you recommend us because of the way we perform and the way we treat people. So if you want that, just call. Don't ever hesitate. Wow, look at this pullback in Tesla, Don. I just saw this.
Yeah, I'm seeing. I just got an alert on it.
Yeah, they are.
Heard it.
They are. Let's see. Let's down to the 21 again. And so
Yep.
look, this is if you want to. My first thought is this is the low risk entry point. This is where I got Tesla last week on Friday, off of the 21, and maybe that was Friday or Thursday night or Friday. And so here it back is it round right back to the 21. But you notice the 21 is moving higher, and so this will be interesting. This is a test for Twitter, and so today's an interesting day because today is the 31st. So do the funds have to rebalance a little bit? Do they have their fill of Tesla? Do they need to show a little profit taking while keeping it on the books? Maybe selling some Tesla to buy some Pinterest. And some of you are going, but it's electric cars. He's going to change the world. Look, I got a 5%. I got a position in Tesla with you. It's just the way money moves.
Well, so what Tim's talking about is the window dressing, the manipulation toward the end of the quarter, and now that's done tomorrow. Starting tomorrow, Monday, you're going to have after the quarter what they're going to do. Then you're going to see the real buying and selling. Right at the end of the quarter, the last couple of days, you get a lot of shenanigans.
So shenanigans today. And then what's interesting about this, so Monday is going to be August 3rd. Is that right? Monday's August 3rd. So
Yep.
that's the first trading day of the month. And are we going to get the jumper trade? So you get the end of the month shenanigans here, but then there's a whole bunch of pension money, hedge fund money, and mutual fund money that comes to play the first 3 days of the month. So that'd be really interesting. And I just said the word pension. And I'd be remiss if we didn't talk about this because it's affecting a huge swath of the population in America, and that's what teachers are getting taken advantage of. And before you tune out, stock nerds, because we're not telling you to buy XYZ or sell XYZ, we're going to do that in a moment. If you just hang on a second, Don will give you every stock that's going up on Monday. I will give you every stock that's going to go down on Monday, and then Danny will make sure that he hedges us with, this is for edification purposes only, never to be misconstrued as advice. Now, but it's important that Danny, I can see you texting. Are you texting me?
Sorry, I was a text from my daughter. Had to make sure everything was okay.
Is she okay?
Doing great, yeah. Well, yes. She tried to call me, and I thought she had a doctor's appointment earlier. She tried to call me, so I wanted to make sure everything was okay. She texted me back and said, sorry, I butt dialed you. So it was nothing.
This is the best. So we were discussing, Danny's got someone to come fix his foundation, which were probably some jokes there I can make in a few like during when we're taping the show. And he goes, I'll just call the person, tell them don't show up. I said, no, it's better if the person rings the bell and you just go off screen, because it's emblematic of what we're doing. Like Don is in his, are you in your sister's house or your mom's house up in New Jersey, Don?
Sister's house in New Jersey, next week in mom's house.
Yep. Danny, that's your dining room, right, Danny?
This
oh my gosh,
is my
Danny.
dining room, yes.
Okay.
You're getting delayed, Dan.
Yeah, Danny, we're gonna have to sync that up here. Just count silently. And this is Nora. That little girl you just saw on Twitter. This is Nora's nursery. Well, I guess her bedroom. She's still sleeping in the what's that little bassinet? She's still sleeping in the bassinet next to Tanya. And so anyway, we're at home. And so normally you wouldn't see it. I don't think though we'll go back to a normal podcast, Danny. I don't want to go back to a normal. I want to do the video podcast. So oh, look at this. Now they're going to turn the gas on, Don. Look at the S&Ps, bottom right-hand corner. Turn it on the juice. They shook out enough people. Now they're going to turn it on. But I want to explain what's happening to teachers, because is it Allianz? Who screwed the teachers? Allianz?
It was AIG, and
AIG.
it's their subsidiary, Valak.
Oh, let's explain what happened, because look, whether you're a teacher,
Valak.
Well, 1 second, Andy, just 1 second. What we're about to talk about, pass on to an educator. It's that important, okay? Because you don't know what you don't know, and we're about to give you some information that most people don't know. Go ahead, Danny. I'm sorry.
Okay, so in 403Bs, which is like a 401k, but for public, teachers, sometimes firemen or policemen, or and sometimes nonprofit. They're 403Bs. The only two things they can own are and mutual funds. And usually what they're sold is an annuity to put the mutual funds inside of. So you may own an annuity that you could own Vandenbord fund in. Well, guess what? Vandenbord is probably one of the approved vendors on that list. You could go straight into Vandenbord without paying the 2% wrapper for that annuity. It's unnecessary. But even if you go into the funds directly, they're normally recommending these funds that have much higher fees. So they were putting
Danny,
teachers in these S&P funds, these Valak approved funds that are much more expensive than the other funds. They got fined $40 billion.
So Valak was putting teachers in funds that paid them more, that gave them more kickback?
Paid them much more. So they got in trouble for 12B1 fees. They got in trouble for payments for referrals. They were getting referrals. They were paying the educational systems, the school district itself. They were whining and dining some players that could get them in front of the teachers, so that they were paying for referral fees. And these RAP fee infractions, which the 12B1 and RAP fees, they're just very expensive products. And if you do it right, that's what the teachers always have, because that's the person that always comes and does the presentation in front of the teachers. It's never just a Vandenbord rep or a Fidelity rep saying, go directly into our funds, our low-cost funds. Because none of the insurance companies, the brokerage firms, make a lot of money on that. So they always put them in front of the expensive insurance companies. And look, if you've got a 403B, look at the mutual fund options. You don't need an annuity wrapper inside a 403B or a 401k or an IRA. Forget the annuities.
And I think Don's got some thoughts on this, and I'll kick it to you here, Don, in 1 second. Look, we get people that write to us all the time, and you teachers and people who participate in 403Bs, you need to be a little bit of a rabble rouser. And the reason why is what Danny said in there is that the salespeople are whining and dining your peers who are on the investment committee choosing your plan. To say they've been corrupted is a little bit a strong statement, because there's some really good people out there, but they're your peers and they're being wined and dined, and they're not infallible. And you need to understand why you've been played, why your fund choices are what they are, You need to ask who's getting, are they taking hunting trips? Are they being given any goods? Are they being, as Danny said, wined and dined? And then what's the kickback? What are the 12B1 fees? What are the incentives that have been placed out there so you invest in the fund choices that you only have? It's a really big deal, and people don't like to they don't like to get involved with this because these are your friends, these are your fellow teachers, and they're the ones making these choices, and they're just as fallible as anybody else. They put their pants on the same way.
By the way, Don, Don, by the way, this was the teachers union in Florida that sued Valak and is suing AIG, and they just got a settlement for $40 million.
Yeah, but how does that 40 million? I guess my point too is it's like when Wells Fargo gets fined for just being Wells Fargo. Remember, the F doesn't stand for Fargo and Wells. That they see, Don, I worked it in. Not even a smile from you, Don. It hurts. It hurts.
Well, Wells Fargo this morning has announced that, well, there's the word on the street is that Dan Loeb's Third Point and Carl Icahn have taken a big active stake
really?
in Wells Fargo, and they are wanting to start kicking some ass there.
I welcome that. They took a big position in it, and it's going down.
It'll keep going down. It's a rumor at this point, but
okay.
See if it comes to fruition. Anything can help that WFC.
Yep. And so look, you got to ask the question, stock nerds, and if your parents they have these funds, or you got to ask why. And you don't get any. The thing is that Danny, they sued and they got what, 40 million in a settlement. Did the teachers get that 40 million?
That's a fine that's a fine. The 40 million was a fine from the SEC. So that doesn't necessarily go directly to them, but there's going to be a civil suit pending. There's going to be some money.
And look, the only people that pay in these things, like AIG, it's a crap stock. It's a crap company. I don't care. Like, I have no affiliation with AIG. Why do I defend the indefensible? It's the shareholders, the people that are the people that are going to pay for AIG's misgivings are the shareholders in AIG. It's not AIG. Just like when Wells Fargo gets fined, it doesn't get you these fines don't get you a better system. These fines don't eliminate the 12B1 fees. These fines just hurt the shareholders in these public companies. They got to start putting these people in prison, Danny. You know what? Some of these people are so mentally weak. The people that run, let me tell you about the people that run AIG. They're so mentally weak that you want to break them, put them in a real effing prison, not a country club prison. You want people to stop doing this behavior, break them in a real hard setting. They're so effing mentally weak that they don't have the intestinal fortitude to do the right thing, and send them off to prison, like real prison. Not this fake ass prison, real effing prison. God, AIG, the A in AIG does not stand for whatever you think it stands for. It stands for what I think it stands for. Don, what you got?
Wells Fargo, there should have been some perp walks at Wells Fargo for making up those fake accounts.
Yep.
And for changing
Carrie
people's investment strategy.
Hiding out. Carrie Tolstad, who's hiding out in Nebraska, I believe.
In 2008, there should have been some people going to prison at AIG.
Yeah,
that's right. Blame the federal government for that. That huge backdoor bailout of AIG was really a bailout for Goldman Sachs. They have so many derivatives that they would have bankrupted numerous institutions, and they're playing the game knowing that they've got a backstop. So that's what it is.
It's so frustrating because it's the individual investor that always ends up with the short end of the stick. These teachers have been teaching their whole lives, and they're trying to do right, and they don't know it. The decisions that they're making in some of these funds is costing them tens of thousands of dollars, and that's the decision between great health care and retirement. That's the decision between being able to help your parents, being able to help your kids, doing all the altruistic things you thought you were saving for. And all it does is it Wells F's you. That's all these 12B1 fees and these ASSs at AIG do. Man, screw AIG. Boy, they're on the hit list now, Danny. I won't stop talking about the.
That's just one more reason you need a sell discipline as well, no matter what you're doing.
But these teachers don't know.
Affect the whole market. That's what happened in 2008. So
there's going to be, you know what? We're not done yet. By the way, I'll touch on this because all these people declaring bankruptcy as a way to screw their suppliers, like they got over leveraged, and you know, like Sur La Table has declared bankruptcy. There's a California Pizza Kitchen just declared bankruptcy, and let me tell you what, there's going to be a day. I don't know. Like back to our friend Mark, who refers to me as the biggest bear. I have no bearish positions, but I'm the biggest bear. And I'm telling you, there's going to come a day where it's a day of reckoning, where the music stops and you're going to pray that you have a sell discipline. But all those people in those mutual funds, like the biggest asinine thing in mutual fund world is, in pension fund world, is you're only allowed to make maybe 2 or 3 adjustments a year. And they pitch it as, well, we're keeping you from yourself. No, you're not. You're keeping it so the companies don't lose money. Like if you take the money from these companies, they cease to exist. It's your money, but you keep it there because, well, you know, I don't have that many moves and it's June and maybe I want to make some moves at the end of the year. And June could have been the absolute time to pull money. The whole system at times appears to be rigged against you in 401k-ville and mutual fundville. And I'm telling you, man, it's got to change, Danny. Who do we write to? Like, who can do this? Who can get this changed?
Well, until you get big lobby money out of Congress, you're not going to see much.
It's wrong. Don, you got words on this? That this is an issue that's near and dear to Don's heart. Tell him why, Don.
My sister's in the New Jersey pension fund. They don't even have a mutual fund option. It's only annuity companies, and you get to pick which annuity company you want to put your money with.
Really?
I got on the phone with her and one of the representatives, and there's no Fidelity, there's no Vanguard. It's AXA. It's just all.
You need to call a couple class action securities attorneys and get them on the thing. They'll start looking at that. They've got, because normally a quote approved vendors like a big outfit like Fidelity or Vanguard, they can go be added on the list, usually in most states without too much problem.
I don't know if it's a state thing or if it's a county thing with them, but it's the problem is that these 403Bs are not managed under the ERISA rules that the 401Ks are managed under. The government has done a pretty good job of cleaning up the unsavory aspects of the higher fees in corporate 401k accounts, but they haven't done anything for the states. They haven't done anything for the 403Bs.
Well, so 401ks, I don't quite. I mean, they're trying to make 401ks the bad guys, and they're saying, look, you private companies, you evil private companies, you need to be more responsible, and you need to get these and the brokerage firms, you need to get the conflicts of interest out, and you need to act as a fiduciary, which I agree with. But then all the big insurance companies, brokerage firms said, wait a minute, this is how we're making our money, and so they watered down the fiduciary rule, and they backed off on the quote best interest rule, which is for brokers. And it's
but you don't really see.
Hang on. It's just in the best interest for the brokers. But then for the 403Bs for their own government employees, they're screwing them to the wall. So they're pointing the finger at private companies, and their plans are worse than anybody's. The government plans are the worst, and they're screwing their own government employees.
By far, but you really don't see in the 401k plans the S&P 500 fund charging 1% anymore. They've done a pretty good job of cleaning stuff like that up in the 401ks.
Yes, I would agree with that. They got to have some index options.
Look, more importantly, what does the A for AXA stand for?
The first A or the second A?
Gosh, is there? I mean, can you
Tough
have
call.
the same word twice?
You can.
You can. Assholes times assholes equals AXA. I think we got it.
All right, let's come on. This is a family show.
That's what Portnoy always says, Danny. And I know you don't follow his account, but that's funny. What
Yeah,
you
I don't
just did
care.
there.
He's not an advisor. He's not registered, licensed. We got to keep it classy.
Is that a rule? Is that a rule? Is that printed in some guidebook?
That's my rule.
Oh, Don, what should we do next? You want to do some watch list stocks? Do you have a preview? Hold on a second. Don. Look what I got, Don. Yeah, right? It's another mystery box. It says Walmart on it, so that's not a mystery. But this was from a eBay seller who sold me a really cool box of cards. There might be some presidential relics in there.
Well, you know what we haven't touched on yet? Any progress on the weekly cleanup plan for?
No, there's none. You know what?
Fire marshal hasn't contacted you yet about?
No, it's a lot of cards. Like it's a boatload of cards, and the problem is I don't know what. Like I have like a stack of cards like this that I want to get graded, and I just haven't sent them in because the process is a little arduous. But I think I found like an intermediary to do this. So Danny, you know how like when you send your car title, like instead of dealing with the government, like there's shops across the state that will handle all the paperwork for you. They'll do the running of the paperwork, and then yeah. Well, for card grading, there's an absolute there's a service that does that for you. So you can send your cards in and get your investments graded because the process is a little arduous.
Like a whole service to do it,
yeah. So I think I'm going to do that, but I need to run it by somebody because I think it's worth it because it'll save me the hassle.
I think it's turning into an addiction, Tim. I think you may need a 12-step.
They have. Well, you know what? That's funny you said that because card opening, like new stuff, not vintage stuff, but new stuff, has turned into almost like a form of gambling because with the short print cards, the special autographs, like your I mean, there's product, Danny, that comes out every week, and it's like there's a product called Topps Museum that just came out this week, and it's 5 little mini boxes of 5 cards, and every little pack has either a relic or an autograph card. It's $550 a box.
Look at that.
It's like Gene Simmons is running Topps, Don.
He's probably got a stake in it. There's money to be made. He's in there.
But it's I have an affinity. I like opening a bunch of stuff, but I don't know. I'm trying to say, do I spend that much money? This box in here, this is actually, it's not a mystery box per se. It's a mystery what's in it in terms of, it's called Upper Deck Goodwin. And so there'll be like Kennedy presidential relics in here, like a piece of his desk or like something. They have some real, like artists will do, famous artists will do proof cards in there and just something different to open up. But Topps has something called Allen and Ginter, which is really cool, which is kind of similar where they had a card last year that had seeds in it that you could plant. Look at that.
Oh, okay.
Just something.
Wow,
just something.
Seeds. Wow.
Magic seeds. You see, magic seeds, Don, magic seeds. Let's do this. I'm looking at my list here. I think we did. I'll tell you what, Don, let's do this. Danny will do, let's get Danny to do the outro now. Don will come in and give you a taste of the 21 over 21 list. And then I'm going to wrap it up with, I've got 4 stocks that I like here, and we'll wrap it up. Go. So Danny, you're up.
Folks, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. They can sign up for our daily market insight. There's a subscribe button, and that will they'll get sent our daily market insight that happens every day after the market close, very short, timely video. And they'll also get this podcast. And then if they go to the webinars page, they can sign up for Don's Lunch and Learn. That's once a month, and that's an hour-long teaching webinar during live market hours on a Wednesday at noon Eastern. You can always also email any of us, Dan@revereasset.com, Don@revereasset, or Tim@revereasset. You can follow us on Twitter @1 Danny Stewart, @TJ Reazor, and @the And of course, you can always call us old school at 855 Real Wealth.
So real quickly, look, if you have trouble finding Don's going to touch on his watch list. It's going to show up here Friday night, Daily Market Insight. And it's one of the best lists you could ever be working with. So let's talk about it, Don.
About 4 or 5 changes this week. A couple got knocked off over the last couple of weeks. They're going to make some reappearances. But when you see things being knocked off, you need to pay attention. It's the real-time feedback that the market's telling you. When it's very easy to make a 21 over 21 list, and I've got like 45 candidates and I'm having to cut it in half to get it to 21, the market's almost too easy. A couple of them have fallen by the wayside, and that's got my attention. It's got my attention because they're easy to replace now, but if the replacements and some of the long-time stocks that have been on the 21 over 21 list start to fall off, then that's indicative of the leaders of the market weakening. And then we talked a little bit about this last week. Where's that money going to flow into? I got upside alerts in financials and transports this week, but those breakouts failed. We got above recent resistance, and then the last couple of days we just completely gave it up. So we're always on the lookout for where money is rotating into. So far, the builders have been the place where money has rotated into 2 or 3 weeks ago and just refused to come out of. With the big NASDAQ type stocks and earnings being behind us, we've got to keep an eye out for the NASDAQ maintaining its position as the leader over the 21-day exponential moving average. If that breaks, we could have an issue.
Hey, this is a great point, and I wish I would have thought of this sooner. So the QQQ is positive. It's the difference between the Qs and the futures are down now, just down a third. But there's a difference between the Qs, which are up 0.5%, the futures, and I wonder if that confused anybody.
That's because of the big pop that happened from between 4 and 5 o'clock yesterday with the announcers. That's not reflected in the futures quote, because that pop happens while the futures are still trading, and then you shut down for an hour and open back up at 6 o'clock. So you see that very often, that what you see in the QQQ, which is the NASDAQ 100 futures, does not line up with the actual QQQ is doing. So most of that pop happened between 4 and 5 o'clock Eastern time yesterday after the market closed.
Hey, Don, do you have any KISS tickets? I'm being serious now. I just thought of this. Do you have KISS ticket stubs?
No, never saved any of them.
That's a bummer. You can get those, they call it getting them slabbed. Like when you see cards get graded by PSA or Beckett, it's called getting them slabbed. You can get your ticket stubs slabbed, and there's money in ticket stubs for certain sporting events, for concerts. Do you have any ticket stubs?
Nope.
It's such a bummer, dude.
Still might have to go back and look. I might have the Rolling Stones from 1981 and the Superdome in New Orleans.
Oh, Dan, you should, if you have that, you should go get it slabbed. Somebody out there is a Stones fan that would want that. Maybe you just want it.
Yeah, me.
But I would be curious. Yeah, I hope you did. Anyway, Don, what else you got? We just talked a little bit there. Go ahead.
Yeah, I mentioned last week that I like the retail discount and variety sector that Dollar General, Dollar Tree, Ollie's are in. They did absolutely nothing this week, but they did pull back on lighter volume into support. So it's time to fish or cut bait with them. They better bounce off of their support here. Ollie has totally, the volume has been a ridiculous dry up over the last 4 days. And it's just gone sideways, not giving up any of its price gains from that big volume move up of a week and a half ago. So that's something I'm looking to possibly add to.
Cool. Give me another one. Give me one more.
One more. Well, let's talk about what I bought this week. Two stocks that we didn't mention that I got into this week. Teladoc, it reported earnings, opened up down, and then took off like a rocket after the first 5 minutes. That got my attention. When you see a red to green move early in the day after something announces earnings like that, it just means that the people that wanted it were playing possum during pre-market and after, and this made higher highs today, so that's good. And I also bought back into NET this week.
Very nice. Okay, so I've got 4 stocks here. I've got 4 stockaroos here. So let's do this. Oh, Don, real quick. I wanted to see this real quick. With sports opening back up, and I haven't looked at these today. Oh, that is fascinating. Why is Penn down today, Don?
They canceled some more baseball games.
Oh, is that what it is? Because Don and I were talking this morning on the call about, I want to go back and look at some of the gaming stocks that would benefit. What's DFKG? Is that DraftKings?
DKNG. Penn has one of the big forward-looking issues with Penn is their Barstool gambling app that's supposed to come out in September when NFL comes back.
Right.
But everybody's seeing, there's a lot of reports of issues with COVID in these the NFL players that are just starting to report to training camp, and baseball, which is smaller, and you hang out in the dugout, but they're getting more people testing positive than they thought
baseball
they
really
would.
Screwed this up. It seems
the
like
word on the street is that the Marlins went to strip clubs in Atlanta after their last exhibition game before they went to Philadelphia to kick off the opener. So
are you serious?
That's the word on the street. I know
that sounds funny, but I'll be the wet blanket. I'm rarely the wet blanket on this show, but that's really selfish, because the Phillies had to cancel, not just cancel games, but the clubhouse attendants I think a couple of them got coronavirus. That one action, and it affects people different ways. It's not like if you're older or maybe somebody older has diabetes. Boy, are you serious that that's actually what they did?
Do you really think that most of these sports figures are altruistic and non-selfish?
I mean, if we want to go
there, I don't know why that facade.
We could bring up the whole China NBA thing.
I mean,
no, I'm with you. It's the same.
Maybe
thing.
Not altruistic, but again, another word beginning with an A.
Thank you, Don. Thank you.
What
does the
Don.
A stand for?
Gotta add them on. Poke the beast. Poke the beast.
But yeah, man, that did you hear that you just triggered a thought. There was a basketball player that left the bubble, because the NBA seems to have done this right, where they created this environment where you don't leave it. But it looks like there was a basketball player that went to a funeral, but then stopped at a strip club for dinner. Like that, I'm not being facetious. That was the excuse. I needed dinner, so he got it from a strip club in Atlanta, of all places. And that one act could have brought back.
He went to have dinner.
No, that's the truth, Daniel. You Google it. Just Google the basketball player from the Clippers.
They had great food, Tim. They had great food. That's why I went. They had great food.
Hey, Wackos in Jacksonville is their motto is the best burger in town. That's a strip club. So hey.
Wait a minute. It's called Wackos?
Wackos, yeah.
Danny, there's nothing on the show I've ever done no amount of cussing, no amount of innuendo that tops what Don just subtly dropped onto the show with Wackos.
Yeah.
I'm surprised they're called isn't the best burger, but the best hot dog. How is Wackos not serving the best hot dogs, Don?
The hot dogs come into the joint. They don't get served at the joint.
Okay, let's move on.
Just wanted to know how long we could go with that, Danny, before it made you uncomfortable. And I can tell by the.
We may have to go back to the podcast so I can actually edit stuff out versus the video where I can't.
Oh, it's the best part. Go ahead, Don.
This is all the Florida Marlins' fault, just for the record.
Yeah. Yeah.
Those selfish bastards.
It is. I mean, it completely is. Like when you start, let somebody get really sick, like an innocent, like somebody who just is doing a job get really sick from this one action. I'm telling you, man, that is a selfish thing that if that's true, that's what happened. God Almighty, that's how do you social distance at a strip club?
Well,
So
good
anyway,
point.
I wanted to look at Penn, and well, this is if you're like, well, that's interesting, Don. It's down 8% today, almost not 8.3. It holds the 21. Like it hasn't given up the 21 since what happened on 7/13 or around that time frame. It's not earnings. Something happened there, and it's holding that gap. That's interesting to me. What is DraftKings, Don?
DKNG.
Wow. I tell you what, I wouldn't have thought that with sports coming back. I bet you a lot of people. How many people got burned on that? Like we're always talking about. Look at the charts. The price is it's price before conviction, right? Like if you have a conviction, like sports are coming back, I'm going to buy the betting stocks. I'm going to buy. What's LVS doing? That's a great question. Is that
buy the rumor, sell the news? The news is maybe out now that people are selling. People got ahead of that.
Yeah, man. Like yeah, like you're not going anywhere or you're losing, and it's got to be a price before conviction. But those stocks,
That's one reason you got to follow the charts.
Yeah, and that's what I mean. It sounds so simple, just follow the charts, But there's so many people that invest based on their convictions or their read of things, and that's really what we were touching on in the beginning of the show. If you're going based on your read of things, well, the whole market should be down in a negative. Like the Dow should be at Dow 200, right? Based on unemployment is worse than it was in 2008, 2009. GDP is GDP, Danny, was the worst reading since 1947. And yet here you've got the old QQQ up near highs. Like it's really impressive. So anyway, stocks that I like here, I like RH. And so this is coiling, my friends. It's down 2% today. I love this pattern, just coiling. Start taking it down, smaller time frame charts. And see if you can find like consolidations here. This is a beautiful 4-hour consolidation that it's got a gap up here. Where'd the gap up go? There it goes. And now you're just coiling, just really nice coil. And I don't profess to know that it's going to do that or profess to know that it's going to do that. What I do know is that 70-80% of the time, a continuation pattern is going to continue. If the story of the stock is still intact and the market's still intact, it's going to continue in the direction to which it's going. So if the story of the stock and the market are still intact, when demand outpaces supply, that should break out, but no guarantees there. I like Dexcom. That's a great pattern too. Again, but it's not the 21. We already own these things in the shop. I bought CRM. I love this pattern too. Not extended, 5 through the 8, hold support at the 21 yesterday. I like me some Salesforce. And then the last one I had on the list to bring people today was Tesla as it pulls back to the 21. So that to me is the 21 is the low risk entry point for stocks. You can buy them on the breakout, then Don's nailing them. And so, but for most stocks that aren't doing the monster gap ups or have that fuel behind it that we discussed earlier in the show, I like buying at the mean. That's where I think I do my best work and I'm most comfortable. Go ahead, Don.
And beware of the failed breakout. Bring up Vertex, VRTX.
You got it.
This may be one where this is one where the technicals are deteriorating, but the fundamentals are still ridiculously strong. 2 failed breakouts there at 306 and 308. this month and now rolled over. Incredible earnings report yesterday, up 107% on earnings, 62% on sales, and it is down 4% on big volume and making new 6-week lows.
That's interesting, man.
That was a leader coming out of COVID too.
What's ISRG doing? What a different chart. I've been stalking this one. I've been stalking the ISRG for a while. That's a low volume stock. What's the volume on ISRG, Don? Average daily? It's really not that.
676,000, but it's a $680 stock. So the daily dollar volume is substantial.
Chipotle sneak. Boy, I love that chart. Chipotle sneaky like that too, where it's not that big of an average daily volume, but because it's a $1,100 stock. Yeah. So anyway, Danny, I'll give you one last opportunity to make great sounds on this show. What do you want to say, Danny?
I'm good. I think it was a great show.
I do too. All right, stock nerds, listen, we love you. Please. As Danny always asks you to do, tell a friend and tell a neighbor about the work we're doing here. We're absolutely here to empower individual investors. We don't have to sell you anything. We don't sell anything. If you want to come on board and have the strategies to which we espouse done for you, we'd love the opportunity to talk to you about that. But if not, call and ask your questions. Don't sit at home and wonder, be frustrated or angry at things. And we'd love to see you again right here next week on Your Money.